How does the cost of toothpaste tell you whether or not you should buy one stock or another? Is it really important for you to know that? Well, we're going to talk to you about that and more. My name is Victor Medina, and welcome back to the Medina Retirement Planning Channel, where we help you with all matters relating to your retirement, how to make sure that you get your legal ducks in a row and you have the most peaceful retirement that you could possibly have. And today I want to talk to you about the price of small cap and value stocks. Now, before you come off of here, we're not going to make this a boring video whatsoever. In fact, I'm going to talk to you about the way that toothpaste factors into it. So listen up to this. You know, when you're shopping for toothpaste, you might check out the price tag before heading to the counter to make a purchase. And if you happen to find that there's a 12-ounce tube of Colgate for $4 and a 12-ounce tube of Crest for $3, you know, maybe you'll go with the Crest. It's kind of human nature to go ahead and pay less if your expected return is going to be the same. And in the case of toothpaste, you're getting fluoride from either option, but paying less makes the return on that investment higher. Now, maybe toothpaste was the wrong example to use because people get really super loyal about which toothpaste they use. In fact, I know that if I don't have the tube that I want in the house, I almost won't brush that day. No, I'm kidding. I'm going to brush that day, but I'm not going to be happy about it. I'm getting a Rite Aid the next day. So you care what things cost, and price does matter. It's why price tags are front and center for nearly everything that you can purchase. Clothes, cars, food, travel, you name it, they put the price on that. And this theory can and should be applied when making investment decisions as well, no matter what sort of economic environment in, whether we're in a slowdown because of the pandemic or things are booming. Regardless of that, we should be applying this price theory to investment decisions. Now, analysts will make the case that with the recent outperformance of small cap and value stocks, or this is sort of a recording in or around the beginning of 2021, that their outperformance relative to their large cap and growth counterparts is being driven by a multitude of factors. Inflation, rising interest rates, presidential policy, economic recovery, among others. And while these factors may contribute, at the end of the day, it goes back to basic economic theory. We know that not all stocks have the same expected return. However, through principles of valuation and using the information that's contained in prices, we can identify stocks with higher expected returns. A stock's current price reflects information about the expected future cash flows discounted by the expected return. And all else being equal, companies with lower relative prices, that's what we would call a value stock, and lower market capitalization, what we call a small cap stock, should have higher expected returns. Okay. However, in the last decade, investors taking this approach to investing may have been disappointed in their returns, especially when they were looking across to their large cap growth brothers and sisters. The 10-year periods ending in each month of 2020 were the 12 of the worst 10-year periods in history when comparing small cap value stocks to large cap growth stock. And it's been a trying time for many investors. And while we expect positive small cap and value premiums every day, there are periods of underperformance, just like there are for all kinds of risk premiums that are out there. Take the equity premium, for example. This premium is recognized by nearly all investors, meaning that if you buy a stock, its expected return is higher than if you buy a bond, because the equity premium suggests that you're going to be taking a little risk on where it's going to go. It's going to end up outperforming. But at the start of this century, we went through a 13-year period where 1-month treasury bills, that fixed income thing, outperformed the S&P. So we didn't get the expected result in the time period. So for investors, rather than trying to avoid downturns or a time when to get in and out of the market, in which case you have to be right twice, when you get out and when you get back in, you may have a better investment experience by staying disciplined so that you don't miss out on the eventual recoveries, as we've seen over the recent months here in 2021 with small and value stocks. So what can we expect going forward from this? Well, based on historical data, we don't expect the experience of this underperformance of value relative growth like we did in 2020, where there was a 39% differential, the greatest in any calendar year of underperformance underperformance ever. On the flip side, we also know that the returns that we've experienced in this recent months may not be sustainable at the current level of outperformance. What we do know is that there is sound economic theory and robust empirical evidence that supports investing in value and small cap stocks, and we expect these premiums to show up every day. We also know that price matters, and paying a lower price implies a higher return. In the end, we believe that investors may best be served by making decisions based on sound economic principles supported by a preponderance of the evidence. And while markets and economies are constantly evolving, the theory that underpins the size and value premium is going to be an evergreen one. So what does that mean for you? Well, take a look at the relative price of the stocks that you are buying. And if you're otherwise looking at something that is less expensive but has a higher expected return, those things might actually end up overperforming over time. In fact, that's what the whole small cap and value stock premium as part of the investment strategy that we put together is all about. If you like this one, don't forget to hit the subscribe button and the like button. This is a little more of an egghead video, but we've got tons of stuff on here that is going to make you happy as you try to figure out how to navigate through retirement and get the best chances of success. We'll catch you in the next video.